You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. We are live for the Option Block one final time here for the mad maelstrom, the mad tempest, call it what you will, of the year that was 2021. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting Options Insider Radio Network, reminding you one final time here as we wrap up the year. If you haven't done so already, make sure if you're just listening to the Option Block, you're missing out on a ton. So subscribe to the full network. That'll get you everything. We will keep you busy with options content, if nothing else. And of course, if you want to go above and beyond, join the live, check out the exclusive programs. TheOptionInsider.com/secret club is the place to go to check out that partay. And of course, however you listen, live after the fact. By the way, we're coming up against it last couple of days here for December. So if you want to get in there for the trading crate, the secret Options Insider, awesome trading crate full of crazy bespoke items. I got looking at a pile of them right now over here across the studio here. Then get in there before the end of the month so you can get entered in the December drawing. Of course, however you listen live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from on the show today. Dare I say it, I don't think we've ever heard them like this before. Let's go out first to the quiet hinterlands of St. Charles, where we are joined fresh and clear and with lustrous sound by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. How goes your new Larry King era, sir? Have you gotten the suspenders yet? And you got the mic. You got the suspenders?
I got the mic, but I need the suspenders. So loving how this thing is so far. I need to interview people and I do what Larry King does, because that's how I feel today.
You sound like you're right next to me in my ear. I love it. I love it. Uncle Mike's right here. Let's see if his compatriot, the Rock Lobster, is equally smooth and lustrous sounding, Mr. Andrew GIOVINAZZI from OptionPit.com. Now, it's a challenge to get quality sound out of the far hinterlands of Maine. He's pretty much the last stop in this here continental United States, listeners. But we did our best. So let's beam him in now. Mr. Rock Lobster, do you too have the rich, lustrous sound of one Uncle Mike?
You tell me. Do I sound
yes.
rich and lustrous like Uncle Mike?
It sounds like you are right next to me as well. I love it. I love it. Hopefully you like it as well, listeners. It's a gift to them, but also really a gift to you folks. You're welcome. A new 2022 of fantastic listening as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, listeners, let's do it. The final trading block of 2021. Going through some of these numbers and looking at some of the trades and trends and data points from this year, I'm struck at how some things that I was convinced were in 2020 were indeed in 2021. And some other things that I thought were very recent were actually last year. It was one of those crazy years where in some senses it just rocketed by. In other senses, my goodness, doesn't it seem like January 6th was a lifetime ago? And yet, not even a year ago yet. So crazy, crazy times. Of course, we'll get to all that looking back in a second. But first, let's set up where we are right now. And of course, it wouldn't be appropriate. It wouldn't really be right if we weren't green on the screen to end the year and pretty much at or threatening new all-time highs in every major index to end out the year. That's pretty much the way things have been all year long. I think 70-odd new all-time highs for the S&P this year. I think you got to go back to the .com madness to really find anything that equals that. So we're in rarefied air, to say the least. VIX coming into the start of the show, a little bit shy of the 17 handle, about 1690. Actually ticking up a little bit. It was a little bit lower. Starting to get a little bit of froth back here. It was still down from our last show, down about a little over a handle, about 1.1 points from this time last year. In terms of VVIX at about a 107, down about 10 points from our last show. And VXX, the product everyone loves to fade, getting some more fade on 1840 when we kicked off the show, down about almost 1.5 handles, about 1.4 points from this time last show. And UVXY 1235, man, a 12 handle when we kicked off. It just had a 20 handle not too long ago, down almost 1.5 handles as well, about 1.4 handles from our last show. We'll get to all the highs and lows and everything else in a second. Oh, VolQ. I forgot about VolQ. How could I forget about VolQ? 1780 when we kicked off the show, down a little over half a point, about 0.6 of a point from where we were this time on Monday. All right, let's go around the horn. Before we get to the madness of 2021, let's start where we are right now. Let's go back to the deep, rich, and lustrous sounds of Uncle Mike. Mr. Uncle Mike, what is lighting up your tape on this final option block for 2021, sir?
Wow, it's hard to believe another year's gone by and to believe this is our 10th year-end spectacular. So we've been doing this quite a while. So what's lighting up my tape is that we're knocking on the door of all-time highs to end the year. We're seeing that. 10-year note is just tinkering right around that 1.5% yield. So we're seeing that. Not a ton of movement in silver. We're up just a little under 1%, but for the most part, I think it's just kind of a slower day. Like what I typically expect the last week of the year, which the last week of the year has gone exactly how I expected it to go, with the exception of Monday, with the doors being ripped off to the upside. But everything else has been kind of quiet in this market, which is normal the last week of the year. So with that, I think that quite honestly, there's really not a ton to talk about today. We do have the Omicron variant that's coming out that seems to be the latest fear of a potential shutdown. I don't think it's going to be nationwide like it was in the spring of 2020, but I know out here in the suburbs of Chicago, there's a lot of talk about shutting schools down again, which is very concerning, but my hope is that they realize it's not quite as nasty and deadly as the previous one, and that kids can still go to school, because I really don't want to do Zoom learning again with my kids. I love my children more than life itself, but I don't love them at home all day when there's perfectly good schools to go to, quite honestly. So that's probably the big news right now in terms of where we are with this market. But if that's the big news and we're at all-time highs to end the year, I think I'm okay with that. So that's what's lighting up my tape right now.
I'm sorry, Uncle Mike. I didn't hear any of that because immediately as you started speaking, I was just lulled into a sense of hypnotism by your deep, rich, and lustrous sounds, sir. So I hope you said good stuff, because I was just carried away on the tones of your voice, sir.
Well, I mean, the other one I kind of feel like is like Primetime Wrestling. I think Gorilla Monsoon had a microphone like this as well.
That's what we were going for. We were going for the Gorilla Monsoon look for you. We knew that would resonate with you. Let's go out now to he has his own little hamlet there. I guess we always talk about the St. Charles hamlet, but the GIOVINAZZI hamlet there on the shores of Maine. They're pretty much the only people living there, so it's kind of their hamlet, I suppose. Mr. Rock Lobster, what is lighting up your tape and the tape of Volman this week, sir?
I was just, I just was having a small conference here with the crickets that are hibernating for the winter.
I thought you exterminated all of them with ruthless efficiency. I thought you had cricketicide going on over there.
Yes. So we did, but they came back. So they saw the new microphone and they can't wait to see how sweet they sound in the springtime. So just be forewarned, listeners, that they will be in all their glory. As far as Volman goes, we do have a low for the month today as of right now. We have very steep contango, so that normally means that all of the vols in the terms are lower in the front than they are in the back, and they're getting steeper and steeper. So the market is starting to gird for lower vol. So that's an interesting thing. And I don't see that trend changing. I mean, we keep having this Omicron news, like they just, the CDC said, don't travel, don't go on cruises, right? And Zoom went up 5%, and Carnival Cruise Lines got smashed, and all the airline stocks. Actually, AAL is up 20 cents. So we might get to that point. You guys remember, when Trump was always talking about the Chinese trade deal, we got a deal, we not have a deal, it was always like the best buying opportunity, right? So he's like, I'm going to be tough with the Chinese and the trade deal, and the market would sell off. Always a buying opportunity. I am starting to think, as this year goes on with this more mild Omicron variant thing, that I think people start fading this. Right now I would fade the huge rally in Zoom, and I would I would look at some cheapy calls to buy in the cruise stocks, just because I don't think people are going to stop going on cruises, to be honest. I think that's how we're ending at least this year with, I think, instead of it all being doom and gloomy, I think the last time we had the Omicron, remember the market sold off, we got almost a 30 VIX, and that was at the beginning of the month. We don't have that anymore. So at least for right now, I don't the cases are going up, but nobody really cares. So I think for 2022, that Omicron news is or the COVID news might be like a more fadeable thing.
Yeah, I'm looking here right now. Carnival is still down on the year, down a little over a handle, about 5% on the year, even though it has rallied quite a bit. It got down to, it's about a little bit shy of 21, about 2070 right now. Got down to 1638 at the beginning of this month. So it's seen by many as, the one of the big turnaround names. So to watch kind of the chart of this name throughout the year is kind of synonymous with overall market sentiment for how the pandemic is going. Remember those days of the on again, off again Chinese trade deal? It seems quaint now by comparison compared to what we've seen over the past couple of years. Speaking of the past year, let's go back out there. And it is our last show of the year, so it is time to look back upon the madness, the maelstrom that was 2021. Let's start with, the trajectory we've had across a lot of our major products, in particular the vol products we like to look at. Like I said, kicking off the show, VIX was a little bit shy of the 17 handle, 1690. Down a little over a point since our Monday show. Of course, we started out the year in a very different vol regime. We were at about a 27 when we kicked off the year. VIX closed on January 4th, which was the first trading day, at about 2690 or so, 2697 or so. So right below the 27 handle. So comparatively much more elevated than it is right now. And then we saw, and this is the question I want to put to both of you later, we saw just the madness for the year. It seemed like it maybe topped out a bit in January, because we certainly saw from a vol perspective, we saw the apex in January. A little over 37.25 was our closing high for VIX for the year, and that was at 37.21 actually. That was on January 27th. And we never really tested that again. We got into the low 30s back in this Omicron last phase recently. And we'll get to that again in a little bit, but not to the 37 level by any means. And of course, if you're wondering what was the nadir for VIX, you can usually probably guess a couple of time frames of the year, and you usually would be right. It could be either this time right now, end of the year, because this is usually a pretty seasonally weak time for volatility, and also mid to late summer. That's pretty much what we saw. We saw the latter there, July 2nd, actually earlier than it normally is. Usually you're talking late July into August, but 1507 was like the low closing print for VIX of the year, and that was on July 2nd. VVIX, similar trajectory, coming into today's show at about a 107. That puts it down 10 points from Monday's show. We topped out for the year, same time, January 27th, 157.69. That's a level, at 150 level, that's a level we visited many times over the course of 2020. And we got back to it pretty quickly this year in January, and then we kind of gave it back up. But then we got back there again. We did, unlike VIX, we got closer to retesting those highs in VVIX. That was on December 3rd, 156.10. If you're wondering, the low, not in July, like you might think. I thought it was around that time frame, but it was not. It was actually in April. The low for VVIX, 97.09 on April 7th. So VVIX could only just barely break the par, the 100 level this year before it had to race back up, and that was actually in April. So that surprised me. Probably surprises you as well. VXX, the product we love to fade, 1840 when we kicked off the show, down almost 1.5 points from just Monday alone. Get this, VVIX hit its high, or I should say VXX hit its high, 84.32. That just sounds ridiculous for VXX, but that's where we were. You probably can guess now when that was, listeners. Around that same time frame, a couple of days later, actually. A little bit of a lag time between VIX and VXX sometimes. And in this case, it was on January 29th. So a couple of days after VIX and VVIX topped out. 84.32. And the low, if you're wondering, just pull up VXX right now, because right now is the low for the year of 18 and change. So, yeah, crazy times in VXX. UVXY, pretty much the exact same story. Coming into today's show, 1235, down almost 1.5 points just from Monday's show. It hit its high exact same day, January 29th, 146.40. That sounds ridiculous as well. Of course, we had some reverse splits and everything else going on there and make those numbers seem a little bit different. Same thing with VXX. But in general, these are just crazy time. And of course, the low, again, for UVXY, just pull it up on your screen right now because it's right now. That's pretty much the low for the year, the 12 handle out there. VolQ, exact same story, 1780 on today's show, coming down about 0.6 of a point, so a little bit less than the other two products. High of 32.20. Take a guess. Yep, January 29th, same day. And the low, 14.13. That was on August 27th, so almost 2 months beyond VIX. So that's kind of interesting. Again, NASDAQ's kind of been a bit of its own beast this year, and that obviously bears that out. Didn't have a low around the same time as VIX did. So a lot to unpack. Well, let's go around the horn. Let's start with Uncle Mike. What are the thoughts, the trades, the trends, the developments from this insane year that stand out to you, Mr. Uncle Mike?
One that I'm seeing, I'm sorry, I need to get closer to the microphone. One that I'm seeing is, it seems to me, and I don't have any statistical data to back this one up, the first thing that I'm seeing is that we're not as gappy as we were in 2020 or even in most of the last 3 or 4 years, meaning that we're not having as many big gap ups and gap downs as we had in the past. It doesn't seem, meaning that the futures don't move a ton overnight like they had been. We're getting a lot of our movement during the trading days. So that's one thing that I'm seeing that I think is pretty interesting. The other thing with which I'm seeing is just the fact that we've held the VIX as high as we have when the market has continued to move higher and higher as it has. If you were to tell me we were going to have this big of a market that we've had this year, and that we've had the VIX at the level with which it has been this year, I wouldn't have thought that would have been done. I thought we would have had some sell-off, so to speak, in the VIX if we were going to have this high of a market move. And then the other thing that really caught my eye is something that Sebastian said a few months ago, is that when we have sell-offs, we don't have as big of sell-offs because of the fact, this was his theory, so I got to give props to the greasy meatball on this one. People already own a lot of puts based on the vol being so high, so we don't get that second leg of a sell-off quite as much. And so because of that, that could also be a reason why we've had a lot of buying on the year, is that the panic sellers don't panic as much because they already have their puts in place. So those would probably be the three main things that I've seen so far this year that have really been trends, so to speak. There is that crypto thing that we have going on, but I think you're going to ask me about my favorite strategy block, but I'm going to talk about that. I'm going to save it for that section of the show when we get to that.
Sounds like a plan, sir. All right, let's go back around the horn to the rockingest of lobster. Mr. Rock Lobster, what trades, trends, oddball developments stand out for you in this mad year of 2021, sir?
I don't think it would be 2021 without mentioning meme mania.
Indeed, you cannot, sir.
Just one of the, and I still think it's there to a small degree, but not like it was at the beginning of the year. I mean, if you look at some of the SPACs, right? 2021 was the year of the SPAC. They stealthily launched some SPACs in 2020, and then everybody discovered them in 2021. Look at the prices of where those were in like January and February. Insane valuations. And I don't think any of them have sniffed that value since then. I don't even know about the last really fantastic SPAC, I think, was the Trump SPAC, right? I think that still has some value. I didn't really follow it, but I know it was another one. So meme land and the power of the retail investor to kind of get it all together on Reddit and pump a stock up. I think I think right now, like Robinhood is on my list for this year because it's a teenager. It's up $1.50. I don't know. I think it's going to make a pretty decent put right. I don't know if it could actually start to regain some of its luster, but when the meme kids liked it, it was a $50 some odd stock. So you do have the ability for things to move. What I think people kind of are figuring out a little now is it doesn't happen like that as often or as a matter of course, right? You can't pump Robinhood up anymore now that it's just trying to be a company and struggle and do all the rest of the stuff that it needs to do to be a company. So I think what we'll start to see is a kind of some sort of return to investing. I mean, but like all of the themes, like Mike was saying, crypto crazy levels this year, right? After getting kind of smeared in 2020, a huge comeback. So this ability for people just to want these crazy, insane gaps, right? I think it makes individual options. I still think the long gamma game, that's something we specialize in at Option Pit. I don't think that's going to go away. We might not have the crazy memeville that we had before, but a lot of the things that were around are still here, right? So the Fed is going to start to pull out of the market. And I think we might also start to see some actual real, like when we sell off, we actually sell off. What Mark said last time was, he's right. If people are, if traders still have a lot of protection or whatever, like every sell-off was bought, every single one. So, I mean, a drop of more than 2% was a surprise. So, we had a couple of 4% or 5% drawdowns because of the Omicron. And I think that as I will be surprised, hopefully knock on wood, because it's good for everybody, but I will be surprised if we see another like 5% decline like we did in the Qs from Omicron or something like that, from another COVID thing. Unless the government decides to like shut things down again, but it seems like there's not very much appetite for that. So I think those are like stocks that just take off to the moon was one of the huge themes of 2021. And if you've noticed, most of the stocks, except for what I'll call like, the Nifty 7 plus maybe AMD and MU and a couple others, maintain their level, right? Because the Qs, 7 stocks are basically 40% of the Q market cap, at least, I believe. So only 7 out of 100 stocks, which is, I don't know. I don't know how that's sustainable. So we'll see how that plays out next year. But I think we still will see some volatility in the Qs for 2022. But all we did was see record highs in 2021. So that one I would say is I'm on the fence about that one. If the Qs can continue to their run, I don't see how it does with the Fed raising rates and stuff like that. So, but I think those are the big themes. And normally it's rare that a theme from one year carries to the next, as we have seen. The COVID thing lasting 2 years, I think, is getting long in the tooth, and we won't see as much out of it next year. Of course, that would be good for everybody, but I also think its effect on the markets will start to decline.
Yeah, you can't really talk about 2021 without the madness that was the meme stock pool. I'm looking here at a photo someone shared. This was back from June. Someone took outside of Citadel HQ, which is down the street here, of pretty much the ape truck, I guess you can call it. It was just someone rented one of those billboard trucks and parked it out front of Citadel HQ, and it had a bunch of pictures of apes, and it said AMC, we're still not leaving, and all this other ape nonsense. It's just hilarious. That was emblematic of where we were. That was still in June. But yeah, it all kicked off in January. In fact, I'm curious for both of you. Do you think we maybe hit peak craziness of this year right out of the gate in the beginning? Because, of course, we had January 6th, which was off the charts in terms of just completely who expected a run on the Capitol on the 6th? Someone sitting in the speaker's chair, all that mad. I mean, no one had that on their bingo card. And that's how the year started. Then, of course, you had all the other madness that kicked off. GameStop kicking off in January. VIX and every other vol product hit their apex for the year. So I asked both of you, did we hit peak crazy for the year right out of the gate in January? Maybe we'll start with you, Uncle Mike.
Well, yeah, I think we did, because that's possibly, it's no question, one of the top 5 or top 10 crazy things I've seen on my 44 years on this planet. Was never expecting something like that to happen. But what's even crazier about that is that the market didn't tank from it. I mean, we sold off a little bit that day, but we really didn't drop that much. I mean, I was very concerned that the markets were going to crash when something like that happened. And so the markets just didn't seem to care about that. And just the fact that we had something like that happen, I mean, I know we restored order fairly quickly with that. But still, the fact that we didn't have a crash from that, we're like one of the most secure, well-defended countries on the planet. And so there's just a handful of times that our country's been attacked. Of course, 9/11, Pearl Harbor. And then when we have we've had plenty of riots, that was more of a 2020 thing. But then 2021, we have a riot on what I would have thought would be one of the most secure places on planet Earth. And it apparently was not that day. So I would say, in terms of the craziness, that there's no question in my mind that was the craziest thing that has happened throughout the year, with a close second being the fact that the market didn't royally crash when that happened.
Mr. Rock Lobster, same question for you. Did we reach peak crazy from an overall, whatever perspective, vol, general, societal? Did we hit it right out of the gate? Because everyone coming into this year, myself included, was hoping for a quiet start to the year, and we got almost diametrically the opposite, sir.
Well, I think there was also, the regime change, right? Everybody's like, everybody's freaking out. I mean, I had people calling me like, there's going to be a takeover, like, oh my gosh. So I think there was a lot of agita built in about the transfer of power.
Sound like my Italian grandfather, agita.
Yeah, exactly. And, and ultimately things kind of went how they've gone every other inauguration, to be honest, except for all the fences and the cops and stuff around the inauguration, whatever. But as far as peak going, right? So that what I like. So normally my view is like, as long as we don't screw up American style capitalism, free market capitalism, the system we have, I think stocks are a good place to put money because it works. So you got 225 or 30 or 40 or 50 years or however long as a country where it works. So, but if all of a sudden everybody's worried about that, the system might be broken or irrevocably, or something like messes with like kind of the foundations, and all of a sudden I think that's really what gave us the vol event. Everything by the end of the year, it's like, okay, well, we have this vaccine and things should be getting better. And that's mostly kind of how it went. Besides, then they had meme stuff, but there was very few other, except every once in a while, the vaccine's not as good, or the COVID's this, or the COVID's that. So I think, we did hit peak crazy. And I think part of that was, as you recall, remember the crazy bid for vol for the election, right? And that was pretty significant, And then we had the election, and it looked like Biden was going to win, after he won. Then the vol kind of came in a little bit, and everybody started to be like, okay, things are kind of normal. And then you had the scare in January, right? They could be not normal, but then ultimately they were. So I think it was an interesting year from that point of view. What I did find interesting is that the COVID era vol regime is still not gone, because normally I score a vol event by when you can go back to a low prior to the event, and we have not been able to sniff the 12 handle in 2 years, really. We haven't been able to hold the 16 handle for more than a week or two. So that part is gone. The big question is now, with the Fed trying to get out of the market, will vol start to get low again? And I think that remains to be seen. Usually, historically, that's what happened. Like, there's a freak out at the beginning, and then all of a sudden, you have, then people kind of get used to what's going on, and that's what kind of, that's how vol goes down. But the fact that the Fed could always jump in and always make that huge move and, try to direct traffic, so to speak, that's a function of the last 10 years since the financial crisis. I don't think it's a good habit, to be honest, for the markets or anything. But I think there's a lot of people that run the country that would disagree with that. But anyway, that's what we have. So I would like to see VIX get right, because normally, historically, where we are, this is actually just like at the 50 percentile, like right at 17 VIX, right? That's just the top of zone 2. So, if you break it up into quartiles, we're still in the middle, right? Even though it feels like it's relatively low, but historically just in the middle for all the samples for VIX over the last 20 years. So everybody feels like this is a low number, but we know it can go much lower. So it's just everybody just be mindful of it, that we have bounced off the 16 handle all year. I don't expect that to change unless the governments across the globe get past the COVID thing. And from what I can tell, at least in Europe and Australia and some other places, they still can't. So I think it's here, and it's not going to go away. Although I do think it will decline hugely in 2022.
All right, let's see what else is declining or perhaps moving out there over the course of this past year. Let's look really quickly, first off, how we're looking today. VIX coming into, as of a few minutes ago, again, not doing a ton of paper, 228,000 contracts. The ADV, remember I said it wasn't going to hang out over 700K for long, so enjoy it. It already is down. It's dropped about 50,000 from our last show. It's down to about 674,000. It was around 729, I believe, on Monday's show. So already back below 700K. SPY at about 1.9 million. The ADV about 5.5 million. The S 600K. That's really light for the S. The ADV 1.59. That'll probably be coming in if we see more days like this. And IWM 349,000. That's back to kind of its usual volume. So ADV back below a million again. 988,000. That'll probably be dropping back to earth a bit again as well. Speaking of action, what were some of the busiest days of the year in terms of volume? Well, a great barometer for that, of course, is SPY. Where SPY goes, the market tends to follow. And we had a pretty much almost a tie for the busiest day of the year. It's within a few contracts here and there, both topping out at right at about a little bit north of 9.1, a little bit below 9.1 million. So technically the busiest day from an overall SPY volume perspective was on September 20th. So it wasn't that day in January and the other shocks. It wasn't November 26th. It was September 20th. If you're curious, that was kind of at the tail end of that sell-off we saw there in late September. S&P dropped from about 44.70 down to about 43.40 over the course of that week. And the next Monday is when we saw the biggest volume day. We saw more sell-off that Monday. The 20th was a Monday, listeners. VIX closed 25.71 that day, so in the elevated range, back in the mid-20s range. We saw nearly 4 million calls going up, about 3.895 million calls. But the big dog, and again, this is something else we've seen a lot. The big volume days tend to be down days because that drives the put paper. We saw over 5.25 million puts that day, adding up to about a little over 9.1 million contracts on the day. Again, most of that puts. Right behind it, though, was something a little bit more recent, December 3rd. This was kind of the tail end of the sell-off for Omicron. Remember, Omicron kicked off around the 26th, Black Friday, and we kept selling off that next week. And then we kind of rallied a little bit. This December 3rd was a Friday, and it was right after we had started. The market had started to rally again after Omicron, and then that Friday, the legs got cut off from it again, and the market started selling off again. And that second wave of selling seemed to really spook people because we saw, again, pretty much almost the exact same amount of paper, a little more on the puts, actually, 5.71 million puts, 3.37 million calls, obviously less on the call side. Total of almost 9.1, about 9.08 million contracts. On that day, VIX closed a little higher, almost 30.67. So those are your two busiest days, kind of a tie for number one, really, between December 3rd and September 20th. Let's look at the most actives now for today. And this is a lot of your frequent offenders, even at much lower levels. Number 10 today only cost you $204,000 to break into the top 10 today. That's not a lot, listeners. I guess you to Amazon. Number 9, SoFi. Haven't seen SoFi in the list in a while. Back there, $229,000. Number 8, Lucid, $246,000. Number 7, AMC, $259,000. It is fitting that on our final show of the year, the symbol twins would be next to each other again. Because number 6, we have AMD at $301,000. Number 5, NVIDIA, $374,000. Number 4, BABA, $386,000. Number 3, NEO, $641,000. Number 2, it's Tesla, $857,000. Number 1, the big dog, $871,000. In fact, if I was going to say, if you look at this top 10 today, it's a pretty good representative sampling of what we've seen throughout the year. A lot of these names were frequent offenders. In fact, if there were some trends from our most actives throughout the year, one of them is obvious. Apple remains the big dog. It gets the crown again this year. It was pretty much top of the list most days we did the show. A few names managed to unseat it. I mean, it could be beaten every now and then. Tesla did it probably with the most frequency. We also saw Ford topple Apple once. We saw Lucid do it. Even Sundial did it one day. So a lot of names could do it once. But Apple would always come back for the crown and take it back and say, get the hell out of here, kid. So Apple gets the crown for the top of the heap for volume. Earnings-wise, if you want to hear a good breakdown of the earnings season and the earnings year and looking back on some of the surprises and everything else, check out the advisor's option. We just posted that with Matt from earlier this week. We did a big look back on all of the earnings move and results and the surprises and shocks there. So if you want more of a deep dive into earnings vol, I encourage you to check out the advisor's option as we head on into a quick look back, a quick recap of the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, let's get into it. Let's look back on the year that was from an odd block perspective. And there are a number of things that leap out to me from this year from an odd block perspective. Let's start with maybe the positive side. One of the positive trends of the year and one of the overall just trading trends of the year was the line in the sand. Put this strategy, any given show, any given episode, roughly 2 out of the 3 were probably line in the sand puts. That just seemed to be the trade du jour. Everyone and their mother was selling these puts. And for the most part, they worked out. I mean, again, it's a bull year, so you could probably reasonably intuit that. But still, we saw the data this year that they all worked out pretty well. There were very few, we probably count them on one hand, puts that really blew the doors off people in the wrong direction. But outside of those, there was really a pretty good year for put sellers. If there was a not so good trend for the odd block for this year that we noticed, it was people putting on trades, even big winners, and getting the win early on and just never taking it off. That was a thing that just perplexed me all year long. You buy calls, you get the huge move that you want, you get it pretty early, and then you do nothing with it, and you sit and you sit and you sit, and the calls eventually expire. And I guess you got the stock that you wanted, I guess. But you could have done much better if you just sold it out and kept all that time premium that you had on the option. So we saw this time and again with puts and with calls and with whatever. Pick your poison. I lost track. We can go do a whole show just on money left on the table from this. But that was, if there was a negative trend, I would say it was probably that. Some names that were frequent offenders. Ford in the middle of this year really started popping up there. A lot of it too early. People were getting into the Ford train very early. We were talking about 17 half, 18 half, 20 handle puts in August and around that time frame, well before the move actually happened. So people blew a lot of money on upside calls until Ford finally made the move. So there were people that were a little bit too early on that tip. Stone Cold, remember this one, STNE? This one was a frequent offender on the put side throughout the middle of the year, around June and that time frame. We saw a lot of Stone Cold on the show earlier this year. And for me, this is another one. I was convinced in my head this was 2020, so I almost didn't put it on my list. But I had to go back and check it. And then I realized, oh my God, it was this year. That just shows, this seems like it was a lifetime ago, but it was March of this year. It was that crazy Denison Mines mine train. That's a ride down in Disney. Denison Mines trade that we profiled in March of this. Actually, it was on February 11th. It was a March trade. And this one is still, to me, if I look at the annals of free money that we profiled, that we've just given you a gift of free money in the option block, it's kind of hard to beat this one. It was just ridiculous. The stock at the time was trading about $1, and someone just came in and decided to just make it rain money out here. They bought over 200,000 of the March 2/2. They bought almost 50,000 of the Feb 2/2, 40,000 of the April 2. They bought the 2/2 strike across the board for hundreds of thousands of contracts. You could come in here, and I did this. I know a lot of you did as well. You could, and it was great because it was $1 stock, so the risk was low. You know, if you're trying to do some of these verticals in like an AMC or others, if you want to buy the stock, obviously huge risk there if it's a $50 stock, or you have to buy a meaty call against it. There's still outlay risk there. This one, the outlay risk was nominal, and you could harvest all of this premium all day long, sell 2/2 till the cows came home. If the stock got up there, you did pretty good. And if it didn't, you kept all that premium. And that premium came out very quickly because everyone discovered this. So it was a free gift to all of you out there, listeners. I hope you enjoyed it. I hope you did well, because that person did not. Denison never got there in that time frame by a country mile. So actually, at one point, one of these prints, the stock was 97 cents when they started buying the 2/2. So insanity. Mr. Rock Lobster, what stands out to you from the year that has been Odd Block? Any trades or trends or things like that, sir?
Well, I thought, remember obviously there was the meme trend in the Odd Block when we started highlighting just the
I don't know what you're talking about. What is that?
Paper. Huh? You're like, what is that meme thing? Like that, all that up. You just remember the volume on and the open interest still on some of these options that are, I think one thing, normally, so line in the sand for sure as a successful trade, we saw that a lot. But also just, people buying calls that had, trying to be kind, but you're buying out of the money calls that had like no theoretical chance to make money. I mean, I guess it was there's always a chance, right? But it was a pretty big of a sliver. Now, I don't think we have seen as much of that in quarter two as we did in quarter one. There was just a lot where we would sit and kind of laugh that, wow, people were buying that. Now, there were a couple of times when the stocks did make some pretty big moves. But that was, the paper rarely was on it by then. Like the stock would make the move and then the paper would jump in. So I think that's definitely one thing that we're seeing. I think the second part to the year, and I think this worked pretty well, is like we kind of got stuck around this 46, 4,700 SPX. And I think we started highlighting more buy rights. We started seeing more rights and just people saying, hey, VIX is still like 19, 20, 21, whatever, we'll sell some calls, which I think for the most part, those strategies, I think that work pretty well. So I think it'll be interesting to see, because it's always good for the listeners out there. The option block just shows trends. What are the trends that some of the big money's doing? And I think seeing more buy rights and things like that, where large institutional holders are just happy with the income side instead of the gain side. I think we'll see that more this year, I would guess. Just unless we have another huge growth catalyst for the S&P 500, but I think you'll see more of that this year.
Oh, yeah, listener chiming in with a good suggestion, which is another one I probably should have pointed out. He says, I think that the crazy Apple paper that showed up a few times this year in 2021, more than a few times, was wild. I look forward to it happening again in 2022. That was another trend. That's part of when I kind of talked about Apple taking the crown. That was kind of included in that. But yeah, that was definitely one of the reasons that Apple was at the top of the heap so many times. Some people out there, big funds probably, just got into that trend of gobbling up the near-term calls. And it worked for the latter portion of the year particularly. So they'll probably be back in 2022. We know who else will be back in 2022 is Uncle Mike. So let's get his thoughts right now on the crazy year that was the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, Uncle Mike, you've joined us nigh on 52 times. I don't know if we've missed any strategy blocks. Probably at least 50, I would say, that you've done this year. Of all the different doses of strategery that you've doled out over the course of this year, which ones really stand out and resonate to you right now, sir?
Well, there's two of them that do. The first one is the one where it was on May 10th, I believe. I'm just trying to look through, make sure I got the dates right. But it was in early May, to where I went on about how I thought Bitcoin was an awful long-term investment. Now, once again, I want to emphasize, if you want to trade it in the short term, if you feel you see something that makes sense to you in the near term, by all means, have at it. Go long, go short, whatever works for you. But as a long-term investment, I felt then and still feel now that Bitcoin is a horrible investment, and that people who are using it as an inflation hedge, or, I'm doing something safe, I'm going to buy Bitcoin. It's a nice safe investment, because if the dollar goes away, then you got Bitcoin. It's a good safe investment. I think that's the stupidest thing I've ever heard in my life. So I do just want to emphasize that was probably one of my favorite ones that I did during the year. And then of course, just by stroke of dumb luck in the near term, Bitcoin went straight down shortly thereafter. So the long-term buy and holders, they're doing okay because they know that they'll be all right with it. But the short-term traders didn't do so well after that strategy block. And then the other one that really stuck out to me, of just something that I've kind of add a lot to my own personal trading as well as for clients in general, would be buying garbage. So in other words, let's say you got a put spread on the SPX, and it's maybe 200 points out of the money, and you're going into the weekend, and then you're just concerned with it. One thing that I've started doing a lot more of this year was just buying garbage, spending a penny or something ridiculously low and buying either a half position or maybe a spread half as wide, or just something really low, and then buying the opposite side of the trade just for the weekend. It's kind of like taking the weekend off. And so that's one that really sticks out to me, just because of the fact that I think it's a good tool to have within your arsenal, especially if you're a premium seller. You can apply this to short puts, short calls, whatever the case may be. And by just having this, you know that if the market goes against you in a major way, at least over the weekend, you're safe. Now, keep in mind, if the market goes down only half as far as you think it did, then you wasted your money on a hedge that won't work for you. But I explained that a lot in the strategy block from when we did that episode. But I think it's definitely something to consider and something to keep doing. Not every time, but if you're concerned about the weekend risk, it's a great way of mitigating it at a very low cost. So those are the two that really stuck out in my head for 2021, and looking forward to 52 new ones in 2022.
What are some of the strategy block sessions that stood out to you, listeners? Are you still mad at Uncle Mike when he talked crypto off the ledge back earlier this year? Are there some other ones that stand out to you? Hit us up. Let us know as we go one final time around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's go around the block. I'll make it a dealer's choice. I mean, I think we're probably going to have a codified, maybe upcoming in the new year prediction type special for the new year. But if you guys want to start now, I'll let you guys choose what you want to talk about for Around the Block. Tell you folks what you're keeping an eye on. Is it for this final week to end the year? You want to go a little bit beyond into the new year, get a little bit daring? I'll leave that up to you. Let's start with you, Mr. Rock Lobster.
One prediction this year, I think we will see a 12 VIX this year for sure. And also one of the stocks I like for this year is Peloton. I think it easily could be up like 50% this year. So.
Are you getting in the cult? You drinking the Kool-Aid with the home Peloton bike and stuff?
I just think as the value of the franchise, it's kind of become, it's in the lexicon now, I would say. I think it's too cheap a franchise to be kind of a lexicon type stock. That just, again, my opinion, and this was one that I think that was like kind of one of the unicorns, and it was $170 and they just killed it. It's $37. So I think that it has a chance to do very well this year. So that would be you're just going for a pick, like a stock pick. I'm very happy to sell puts in that stock. Like I'm looking at the 27 level. And that's what happens. We'll see what happens. If it starts to pick up, well, then I'll go buy a couple calls.
Well, they killed Mr. Big, so they got to kill the stock, right? That's
exactly. That was it. Like they killed Big, they killed the stock. It's got to be a buying opportunity. Sorry.
I will say though, like getting the skinny from some of the moms at my kids' school, there is definitely a cult of Peloton out there. It's pretty strong. So if you're in the weeds there, it has some staying power. Definitely, people who are into Peloton are definitely into Peloton. I throw the cult around loosely, but only half jokingly, let's say. There is a strong, shall we say, attraction to Peloton out there. Mr. Uncle Mike, are you in the cult of Peloton? And what else are you keeping an eye on for the end of this year, beginning of next year?
Definitely not in the cult of Peloton. I think it's a cool thought, I guess, but I'd rather just go to the gym personally if I can. So that's just me. I'm going to go out on a limb for 2022. And I'm going to go with 4 predictions for the end of 2022. SPX 5,300, VIX 11.41, crude oil $91.53, Bitcoin 13,000.
Wow. Okay, we need to get all those marked. I also need to go back, and I didn't have a chance to do this before the show. I need to go back to last year's end of year Palooza because the year isn't over yet, so we can't pay off anything yet, but to track some of those if we made any and see how they paid off is over. Uncle Mike going out on a limb. The Rock Lobster, not so much. She's getting more sucked into the cult of Peloton. But Uncle Mike, 13,000 Bitcoin. You're going to make some friends with that one. All right, listeners. Unfortunately, that music is now sounding for the final time here for 2021. But don't worry, if you want more in your ear holes immediately, stay tuned. I'll be back in about half an hour to wrap up the year of madness in TWIFO. What were the top movers and shakers for the year in futures options? You got to tune in to find out. In about half an hour, you can join us live if you're in the secret club. If not, just hit next on your device of choice. This should be there waiting for you by the time you're done with the option block. And let's go back around the horn. Mr. Uncle Mike, if folks want to give you some umbrage about that 13,000 call in Bitcoin or anything else, where should they go? What should they do?
Oh, you can give me umbrage in many places. Feel free to check out my website, stcharleswealth.com. Feel free to follow me on Twitter at Mike TOSAW. Just reach out to me if you're looking for a financial advisor who likes the option product, who doesn't necessarily like Bitcoin on the long side.
There you go. Mike can talk you into some options. You can talk him into some Bitcoin. It's a win-win for everybody. And you all can just dive into Shiba together. It'll be a big party. You can kick it off. stcharleswealth.com is the place to go. Check him out on the old YouTubes as well. And give him a follow on the old Twitters at Mike TOSAW. In fact, Mike's going to get a little bit more active on the old YouTubes. Maybe we'll work diligently in the new year to help get some of that content to you. Learning options with Uncle Mike. And Mr. Rock Lobster, where should folks go if they want to give you umbrage about Peloton or anything else, sir?
I just will say that I do like Mike's picks. I like those prices on all of them. So I wouldn't be too far away from any of that.
So you're saying with TOSAW right now?
I like them. I would just say with. Yep. I'd make it easy. Make it easy.
You're that guy in the back of the crowd with. That's you, Mr. Rock.
I'm the with guy.
Loving it.
I'm the with guy in the back of the crowd. So when you're tired of pillaring TOSAW over his Bitcoin call, you could just say that damn Rock Lobster agrees with it too. So, you can go to optionpit.com and we are growing. We are now also a financial publisher. Just a great year. Our marketing team is really awesome. Mark's been having a lot of fun. He's been doing a lot more media, putting out a ton of trades, lots of really good stuff. So, yeah, Option Pit's good. If you want to learn how to get your juice for free, we have, of course, an Option Pit called the Trading Legion. We're running a special right now. You can do lifetime this year for the same price as an annual. It is our most popular seller just because people want to learn how to get your juice for free. So if you want some learning how to do it live and getting some trade ideas and seeing how it works and seeing how to manage trades, you get to follow me and check it all out. And people like it. So anyway, just head on over to optionpit.com and put your learning on.
There you go. Put your learning on optionpit.com. You like his piton puts, maybe you like Hood better or something else, hit him up. Let them know over there in the land of the pit. And like I said, that's going to do it for us for this year, for this show. We're not done entirely for the network. We'll be back in half an hour for TWIFO. Back again tomorrow, noon Central, 1 p.m. Eastern, to wind down the year of volatility with Volatility Views. And, of course, back next year with the Option Block. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.